What the price action is telling us is that the big money, may or may not be the smart money,
Yeah. Yeah.
but the big money doesn't think this is sustainable and that there will be a pullback. But I do think that it is prudent to look at silver, if it's in the more than catching up with gold phase, that is something to take seriously. And by the way, if it is, it could actually signal it's going much higher. I'm not calling a top here. But if that's the blow off top coming, then that does imply, a downturn, a substantial downturn afterwards, if not a bear market. The big miners really flubbed it, Jeremy.
Yeah.
Mentioning Rick Rule, I'm sure you've heard him say that it takes real talent to turn a sevenfold increase in the underlying commodity into increased negative free cash flow, which is what they did. And I've charted it. I know that it's true. So that's the recency bias. That's the last big move we saw. And again, whether it's the smart money or not, it's the big money. And they looked to what happened last time, and the miners flubbed it. So it's kind of a show me, don't tell me. And the good news here, this is, I think, very good news, is that the miners are showing much more discipline this time. I'm not saying they're all perfect, but heads did roll. And the CEOs now know that. And we're not just seeing, willy-nilly buying of, millions of ounces here and there in countries where you can never build a mine or something like that. There is a lot more discipline. And we are seeing margin expansion. I plotted that too. It's actually happening. The problem is, unless your mine life is 1 year, right? That price will see the costs catch up over time. And if you have a mine big enough to matter, at least 10 years mine life, if not 20, a couple decades. A great mine has multiple decades, 20, 30, 40-year mine. The big copper ones go for 50 years. But you can't use anything remotely like the current spot price to decide whether you're going to spend the billions to build these things. This is normal. Actually, let me address directly, Mr. Audience. I'm looking at you. If you're one of these people who think silver is going to 4 digits, and anybody who says otherwise is obviously an agent of evil, and you can't sell ever anything. Let me address this. Think about Warren Buffett's or your mainstream investors, or think about your Doug Casey's or your Rick Rules closer to home. All of those people take profits. It doesn't mean they lack conviction. It doesn't mean they're in league with the devil. It doesn't mean they hate everything good in the world or your favorite mineral, metal, or commodity. It just means that's how you make money. And on the silver, I just heard David Morgan, who is perhaps the most beloved silver guru. I may be Darth Silver. He's the opposite. He's the silver guru everybody loves. And he was saying, look, you don't want to buy silver at 50, see it go to 150, and then have it ride it all the way back down to 50. There is nothing wrong with taking profits. And you should. Okay, say it goes to 150, you take some profits, and then it goes to 200, right? That inflation adjusted all-time high. So you lost some opportunity. So what? You've got money in your hands, realized gains. No gain is real until you take some profits and realize it. And one more thing, when we talk about all this trading, we're mostly talking about the stocks, not the metal itself. I don't think I've ever sold an ounce of silver since my financial meltdown in 1999. And by the way, and that's what silver and gold are for, right? In case of emergency, if you have a rainy day fund and it saves your family. I literally fed my family when I had a financial meltdown with my rainy day fund. That's what it's for. But since then, I've given silver to friends, family, children, whatever, but I don't think I've sold an ounce. That's not what I'm talking about. I'm a speculator. I buy silver miners and explorers and developers. And if I've got a 10-bagger and silver's just gone vertical, you don't know what's going to happen next.
Yeah.
It is not a crime. It is not evil. It is not a silver hater thing to do to realize some gains.
Lobo Tiggre, the independent speculator, performs a crucial stress test on the silver market after its violent surge to $80 and subsequent sharp correction. He dismisses the viral rumors of bank failures and secret bailouts as unverified noise, attributing the volatility instead to exchange-mandated margin hikes flushing leverage from a thin holiday market. The core investment mystery, he argues, is the massive disconnect between exploding metal prices and stagnant mining stocks. One of these must be wrong.
Well, the commodities themselves are the simplest answer to that. Like if you're a bull, but you're very low risk, that's where you start. And then moving down the food chain, the major producers and the royalties give you more leverage to the upside and still relatively less risk. If that's your outlook, if that's what you think is next, then I wouldn't bother with the juniors and even the mid tiers, because there may not be time. If we're going into the blow off top, then that implies a peak and a decline afterwards. There may not be time for trickling down lower down the food chain. So you go for the blue chips. If you're in my camp, where we expect at some point some consolidation here, and then before the next move higher, then there is time. And some of my favorites are the pre-production sweet spot plays, the people that are building their first mine. The market loves those. And there's a substantial re-rate when you go from, it makes sense. You go from literally pouring money into the ground with diamond drilling or reverse circulation drilling, right, to getting money out of a big hole in the ground, mining. And so it's logical that there will be a re-rate there. And that is one of the most predictable patterns that I've found in mining stocks, which is extraordinary for something that's highly speculative. So I like that a lot. I think there's potentially more upside in gold and silver, especially if we get that blow off top. There's a potential for massive surges, probably much higher than copper could do. But there's no guarantee that will happen. Even if we have a longer term bullish outlook, they could both go into consolidation mode, and it could last all year. I mean, when gold hit 2000 in 2020, it took 3 years for that to consolidate before really heading sharply upwards again. And I'm not saying it needs to take 3 years now, but I'm just saying we could see a perfectly healthy correction and consolidation before the bull market continues for a long term. That would not make gold or silver your top performers in 2026. I see actually copper and uranium both as similarly bullish. The difference is that uranium, if there is a nuclear accident, can be an investment class that literally melts down on you. And that can't happen in copper. But I see them both as supply constrained. I see them both as having a fundamentally bullish case anyway, but on top of which we've got AI hype, electrification hype, this massive build out that is bullish for both uranium and copper. Now, that's good news and bad news, because on the one hand, as a tailwind, it can really turbocharge the upside in both of those metals. Yeah. But if the AI bubble pops, or even just goes into reverse deflating without, not in a non-explosive way, that tailwind turns into a headwind.
Lobo analyzes this as a potential show-me story where big money, scarred by minor mismanagement in the 2011 cycle, awaits proof of operational discipline and real margin expansion. He outlines tactical approaches for 2026, favoring copper and uranium for their structural narratives, but sees a generational opportunity in select silver miners if the current metal price holds, advocating for taking strategic profits rather than emotional hold-at-all-costs dogma.
I would actually consider that a much better outcome than a blow-off top. I mean, if we have a blow-off top in the next few weeks, great. Well, I'll make a bunch of money, but then the party's over. I don't want the party to be over. And as a fundamentalist, Mr. Market doesn't care what I want, but as a fundamentalist, the debasement trade is far from over. I just don't see why this bull run for gold and silver should be over. Right. So a period of consolidation and correction before going to the next leg higher, I think, is A, more likely, and B, more a preferable outcome. Happy New Year and a very prosperous New Year to our audience. If you've been listening to Jeremy, Kitco News, me maybe a little bit, we've done well. We've offered great guidance. I don't look in a crystal ball very often, but I am feeling very optimistic about next year, and I appreciate your help getting the word out, Jeremy. All year long, I posted a meme earlier with a gravestone that said, Mr. Slammy, RIP 2025. It just seems like every time there's a market event that, those inclined to see a man behind the curtain in some of these actions would say, oh, there he is. There's Mr. Slammy. Every one of those gets bought.
Yeah.
And for that not to be the case this time, we would have to actually have seen the top. Exchanges have rules. And what they did was not something they invented out of whole cloth overnight. They have rules for extreme volatility, and even the broader indices, right? If the S&P, goes up more than 7%, I think is the current circuit breaker, or down, right? The major exchanges have rules for extreme volatility. So I'm not saying it's okay and that I don't mind when something, pulls the rug out of a rally that I'm long on. But I'm just saying it's not true that they suddenly, suddenly whiplash showed up and yanked the rug out of everybody with no precedent. And we have seen it before. And it's not just silver; it happens to other things. So it's a mistake to just look at what happened to silver and say, "Oh my God, obviously this is manipulation." Well, if copper got smacked down at the same time, and platinum and palladium got smacked down even more than silver, then you really can't logically say that this was about silver. So on one paw, I am a wolf after all. And you could make a case that nothing untoward has happened. This was within the bounds of existing rules. Yeah. On the other paw, the timing sure is suspicious. I can absolutely understand why anybody who remembers the Hunt brothers, and I do, by the way, I don't dye my hair. It's just genetics. You can see that I have reason to remember the Hunt brothers. Of course it looks suspicious for a rule change to happen just when everybody is getting, excited about the trade. I get that. But what do we do with this, Jeremy? If it wasn't, there's nothing we can do about it. And for people who say, "Oh, well, it's manipulated. I'm taking my marbles and going home," I understand the emotion. But if you do that, you're out of the market. You have your opportunity cost for missing out on what could be the next big leg up is substantial. Earnings, margins expansion, bottom line. And I'm not saying every company will do well, but the industry should deliver.
Yeah.
And that looks very well, because at that point, this becomes almost more Buffett friendly. You've got companies printing cash and they have a huge moat. Like even if you make a new discovery, which is hard to do, but even if you do, it takes years to permit it, more years to build a mine. So a price surge like we've seen, and not just silver and gold, by the way, but the platinum group metals, copper's doing great. The metal surge that we've seen, sure, will high prices cure high prices eventually, but it takes years. There's an actual physical moat, not full of water and sharks and crocodiles, but a physical moat to new entrants into this space, which gives the existing players chances to make money. So I'm very keen on the miners. I'm very keen on having a portfolio of the best of the best. But I must say, Jeremy, to be perfectly honest, if I didn't own any, would I rush out and buy them today with silver, between 75, 80 bucks? Honestly, I wouldn't. I would probably wait for the next fluctuation. We just saw a fluctuation. In fact, the first thing that I did when I saw silver and gold puking as soon as the U.S. opened in the morning, I went to my shopping list and I started looking at the stocks. Okay, are any of these going to hit my targets? Yeah. None did, but maybe I'll be more lucky next time. But
maybe this week. I mean, some of them are on the upswing today with the stabilization.
But then I'm long, Jeremy. I can say that it's easy for me to be patient because I already have a portfolio full of gold and silver. I'm positioned to benefit like no matter what happens. But it's just really difficult for me to tell somebody, yeah, okay, well, compared to gold and silver, the gold and silver stocks are cheap. That's true, but that's not how most investors look at it. That's not how market determines price. Ramped up earnings will. Margin expansion does matter, even to the new money. So there's no hurry. This will take quarters to play out. And as Doug Casey, my mentor, always said, you can make volatility your friend.
Yeah, well said.